Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. This is a technical look at the sterling versus Aussie for February 25th. This pair has been ping-ponging back and forth, and it had some traders confused in the Forex Live community. So I thought I'd take a look at this currency pair and try to make sense of what's going on here. What we're seeing in the sterling versus Aussie is a currency pair that's in a box, okay? That box is defined by this high here around the 99.11.12 level and by the 38.2% retracement around the 96.03 level. Why do I pick those levels? Well, we bounced right off the 38.2% retracement. We came down toward that level through here, found support again against that level. So we have a couple reasons why we should have support against the 38.2% retracement. Not only is a Fibonacci retracement, but we had some lows against that level. So that defines my low. Now on the top side, we did have an exhaustion move to the upside here. That came against this top side trend line, this parallel trend line to the bottom here, and found sellers there. This kind of left an island up here, didn't it? Where we had highs through here, and then we reestablished those highs right here, right here. There was a little bit lower than over here. Why? Because sellers came in against these old highs. They sold ahead of those levels. And so this area right here, around the 99.11 level, becomes my ceiling up there. And I know it's a ceiling because over here we found sellers against it here. And we tried to go above it in trading here today. So we got actually into the attic through here. But could the momentum be sustained? And the answer is no. The market got outside of the box, but we could not sustain that momentum to the upside. It's very similar to what we saw down here. When the market fell below the floor, went into the basement, and could we sustain the selling to the downside? And the answer is no. So the next time the market came down to that area, we found buyers again. And at this point right here, the market said, no, we're not going lower. We tried it once, we tried it twice. Now we're going higher. And we started to see the buyers return the market to the upside. It may not suit with the fundamentals that you're seeing that force the market to the downside while the market went up when the market reversed itself. But from a technical perspective, we couldn't get outside and stay outside the box. So the sellers turned into buyers. It's as simple as that. And then when we started to move back above some of the the 100 and 200 hour moving averages, the green line represents 200, the blue line represents 100. We started to see the more buyers enter the market. And now where do we sit? So for now, what do we have right here? We have the 100 and 200 hour moving average. And what happened in the late New York session yesterday? The market fell below the 100 and 200 hour moving average. Is that more bearish? You bet it is. All right. And so when the market corrected up here and we found the sellers right here against this level in this little point right here, and the market couldn't get above the 100 and 200, what have we seen in the last hour? A move back to the downside. We're seeing increased momentum to the downside. Why? Because it couldn't go higher. It couldn't go higher, so it went lower. And so now we have a battle going on between this old level right here at the 96.77 level and the 38.2. Where's our target on the downside for this currency pair? Right here at 96.03. If we can't get below that level before we move back above the 200 and 100 hour moving average, what are we going to do? We're probably going to move higher. So traders here are selling against the 100 and 200. We need to get below the 96.77 level. We need to get below this 38.2% retracement and stay below that level. And if we're able to do that, then we have the potential to move down to the 50% retracement. If we can't get below these levels before we move back above the 100 and 200, then the buyers are going to come back in and force the market to the upside. It's just the way it is. Market's in a non-trending environment. We're in a trader's market. You have to be able to be flexible, buy low, sell high. If it breaks out, look for further momentum. If you don't get further momentum in the direction of the break, you have to get out and look for the market moving the other way. And put aside what your fundamental views of the currency pairs are, because oftentimes they don't mean a thing in these types of markets. My name is Greg Michalowski. I hope that answered some of your questions on how to trade these types of markets. If you didn't, put a question in and I'll be happy to answer it. Good fortune with your trading. Bye-bye now.